Okay, so we're gonna be going through Costco as a stock. So this is gonna be kind of maybe a series. We'll see. But I'm gonna be going through some stocks that I think are in bubbles and are at dangerous valuations that you need to watch out for. I would recommend them as a strong sell. So Costco is one of those stocks. Okay, now Costco is extremely overvalued. Okay, P ratio is 50 times. So they trade 50 times earnings, and they also trade 48 times forward earnings. So even next year, like their P ratio is only projected to contract by 2%. And obviously, if the stock market goes up 2%, the stock goes up 2% in price, that's pretty much going to turn into 50 times, and that's going to go to 52 times, etc. So it's very overvalued. Year to date, it's up 25%. Obviously, if we we don't need to calculate what it was, because we can just see obviously at the start of the year it was at 650. Was it even a reasonable valuation back then? Don't think so. Not really. So, but let's see, where was Costco in March 2023? It was 471, which is not too bad actually. Yeah, the P ratio was 29, which you could say was not bad, but the problem is Costco's revenue growth, this is just a guess, but it looks to be around 10% annually, you could say. I think 10% annually is a fair estimate. And the EPS growth, again, you could say maybe a bit higher. A safe estimate would be 13% annually. When you take that into consideration, you know, Costco is pretty much, let's see here, 3.8 times overvalued on an EPS basis. So obviously, you know, if you want Costco to have a P ratio of like 20, which I would consider a decently fair value for Costco, you know, it would have to be at about 300, maybe 350. Yeah, which is going to be about a 60% decline from all-time highs, which is a lot. And it doesn't seem like Costco throughout its history goes through declines of that nature. I can't see it. Between April to May 2022, there was a significant decline actually, where it went from 600 to 416, which was a 30% decrease. But it did recover by a year. So it was a year, exactly. A little over a year it recovered. That was all-time high. So you could say it's arguably overvalued 3.8% or 60% overvalued. which would represent like it's down downturn from here. Now they do have a dividend, so they've got like maybe a 13%, 12 to 13% annual growth rate in dividend. So they are good at paying dividends. They've also paid some irregular special dividends, I think twice throughout their history. They paid one last December, and they paid one in 2020, but that's every 3 years. It's not a regular thing. So, oh yeah, they also paid a special dividend of $7 in 2017. So I think, and 2015 as well. So it seems to me that they'll pay a special dividend every 2 to 3 years. That is quite significant. So obviously, that's something that shareholders to look out for. But you shouldn't be buying Costco based on the fact they pay a special dividend every 3 years. It's not enough. But they are a dividend growth stock, which is nice. But I think even if you include the special dividend they pay, which I think is factored into the annual growth rate, the trailing returns of Costco are good, but it's not. Unfortunately, the valuation is way too high, and it cannot justify its current valuation. And that's just the facts. They don't even have a buyback program. I feel like a premium price stock needs to have a buyback program. They also have very low profit margins. I think the entire industry do though, so it's not really to knock them for. Their cash doesn't increase a whole lot on a consistent basis. They seem to be inconsistent with the debt. Cash minus debt. Yeah, they seem to be inconsistent with the debt, but they are usually net cash positive, so the debt isn't a serious issue. They've also got accounts receivable as well, so they've got no serious debt issues from what I can see. What else we can point out? The OCF positive, which is good. Free cash flow is good. They've had years, but it's depleted. So not actually consistent there either. Low quick and current ratios. Might be an industry standard though. So yeah, like for me, I just think you know, it's just it's not good enough for Costco. Like, I would recommend that if you have Costco, you'd sell it just because it's just too overvalued. In terms of the forecasts, they don't seem to be much different from its history. Pretty in line.
statistics, EPS growth is actually expected to be 10% annually, which is less than the average. So it could be 4 times overvalued on an EPS basis. And then revenue growth is actually going to be 7% annually as a prediction, so lower than the 10% that I kind of theorized here. So with Costco, I mean, I know historically, you go back to 1995 and above, it's performed pretty well and it hasn't had many sell-offs. It's been a fairly stable stock from what we can tell. Obviously, there have been times where it's sunk, but it's nothing compared to tech. I guess we can check the historical PE ratio to see what this is about. To a 10-year basis. 28. Obviously, it's gone out of hands to this day. It's at all-time PE highs. The lowest you could have got Costco was 28 times PE back in 2014. That's just the 10-year period. The all-time periods, well, it only became profitable in 1998. Seems like 2000 and 2009 were the lowest you could have ever bought Costco. If you bought it in 2009, that would have been a deal of a lifetime on a PE ratio basis. But ever since then, it's just kind of become very overvalued. 16 times was the lowest you could have got it. Now, don't get me wrong, PE isn't a cut and dry metric, because the valuation of your stock can become useless overnight. Well, not overnight, but if a company severely misses on EPS in one quarter due to restructuring and stuff, it would tank, and then the valuation of the stock would be absurd. Like, for example, if Nvidia don't meet expectations, and they miss by like 50% on their EPS, that stock is going to tank like crazy. So it is worth pointing out that just because you bought stock at what seemed to be a good P ratio at the time, the EPS could easily be worse in the future. We've seen it with many companies, but a healthy company has the EPS consistently growing. That makes sense. And that's what you want to look for when you invest in companies. The company's EPS is consistently growing. If it's not, I would avoid it, but sometimes there can be exceptions, like with oil stocks, which is cyclical. But I actually need to check with this with the rest of my stocks. So yeah, I would not recommend